Hi, it's Jerimiah Taylor here at the Taylor team at Movoto Real Estate. And I know that a lot of you are watching the interest rates, you're watching inflation because we're getting a lot of questions from consumers. So today's video is all about inflation, interest rates, and owning or buying a home in 2022. You see, when you look back in time, there's been some precedent for what's happening today. In the early 80s, we had massive consumer price inflation. And when you looked at that numbers, the way that the federal government dealt with that is they very quickly and very drastically raised interest rates. Some people think that that could happen again today. Now, do I see rates going to 16, 18, 8%, 10%? Probably not, because what we have today with our federal government is this boat anchor called the federal debt. And if rates got that high, we wouldn't be able to service our own debt, which would cause a myriad of other problems. So it's unlikely that interest rates will go back to those historical highs. However, it is very likely that interest rates will trend up in 2022. The Fed has called for as many as 4 to 5 rate hikes this year. Now, while those rate hikes are not directly correlated to the mortgage interest rates that you pay when you finance a home, they do have some effect. And so you see, one of the most important things to keep in mind is that 1% in interest rates. So today, rates have already come up from their historical lows of around 3.25% to 3.5%. I've even heard of some of our clients getting rates in the 2% range, 2.5%, 2.75% range for 30-year fixed rate mortgages. Well, today, early February, mid-February, that number's more like 4% to maybe 4.25%, depending on your loan type, down payment, credit, etc. So just that 1% movement in rate equals to a 10% change in your payment. So what that means is if you're buying a $300,000 house today, with the new interest rates, it's the same as buying a $330,000 house at the old interest rate. And so you really want to be mindful of the impact that rates can have on your monthly mortgage payment and the overall affordability of your home. Now, conversely, whenever we see big inflation like we're seeing today, what that means is we get the two kinds of big price growth in the real estate sector. Number one is home price growth, and number two is rental price growth. It's been unbelievable to see how much rents have risen across the country in the last 12 months. I've seen homes that a year ago we struggled to get them rented for $1,150 to $1,200 a month in the Tucson submarket. That same home is now renting for $1,600 to $1,700 a month. And that presents significant challenges for people looking for rental property in today's market. Now, the interesting thing is, even though that rent price growth has gone so sky high, home price growth has also gone sky high. So that same home a year ago may have been probably $200,000. Today it's probably more like $260,000 to $270,000. The difference and the benefit to being a homeowner, though, is that the mortgage payment on a $250,000 to $270,000 house on an FHA loan with a simple 3% down payment is going to be less than you would pay to rent that home. And so as we've seen these big moves in rental prices, homes have remained historically more affordable to own than any other time because of what we've enjoyed with interest rates. And now we're starting to see some wage growth as well. So it's a good time to buy. It's always a good time to buy when you're looking for a place to call home. So reach out to us today. We'll be happy to discuss your unique situation, help you create a strategy for the right time and the right way to purchase a property and how to navigate this changing environment. It's Jerimiah Taylor here at the Taylor team at Movoto.